Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 3rd of September 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of. And of course, as it's a Monday, we'll look at these from a weekly perspective. Mostly a story of dollar gains. The one exception really among the majors, the euro pushing back against the greenback to trade just above 116, up by around 0.64% on the week. But elsewhere, it's not a pretty picture. The Australian dollar down by around 2.14% against the US dollar, eclipsing the losses from its near neighbour, the Kiwi. The Mexican peso down by more than 2% against the US dollar, and this in a week that saw a fledgling trade deal concluded between, or at least in broad terms agreed between the USA and Mexico. A South African rand reflecting the ongoing concerns about emerging market economies and their currencies, down by around 3.86% against the US dollar. And the dollar index for its part, not exactly resurgent, but bouncing nonetheless, up on the week by 0.36% and back above that key psychological barrier of 95, or at least that barrier as we see it. Okay then, what's on the calendar? Events that may move the markets today. A pretty packed calendar, at least as far as this morning is concerned. But first of all, I should point out that it is Labor Day in the US, the last big holiday of the US summer. American markets will be closed, and that may have an influence on levels of activity today. Data-wise, though, we've already had plenty of data out of Asia, starting with Nikkei Manufacturing.PMI for August out of Japan. We also saw TD Securities inflation data out of Australia, gross operating profits for Australian companies as well, job ads from New Zealand for the month of August, and Australian retail sales for the month of July. A further disappointing read there from those. But the main pick of early data from Asia, the Caixin Manf.PMI for August out of China. Figures were in line, but we'll look at a bit more detail of those numbers momentarily. To come, we have PMI data out of Spain, Italy, France and Germany, all ahead of the 8 o'clock release of market manufacturing PMI data for the Eurozone as a whole. That'll be followed at 8:30 by a speech by FOMC banker Evans, and then we'll have at 8:30 as well the market manufacturing PMI data for the month of August from the UK, and then a break till 23:01 GMT, where we'll see the release of the British Retail Consortium like-for-like sales data for August, and that'll be followed at 23:50 by Japanese yen foreign reserves and monetary base data also for the month of August. Right then, breaking news and comment that's caught my eye overnight and over the weekend. First of all, China's Caixin Manufacturing PMI data fell to a 14-month low of 50.6, in line with forecasts admittedly, but wildly divergent from last week's official figures, and I think that's an important distinction to make. Emerging market issues are ongoing this week. Turkey's inflation rate leapt to 17.6% versus a prior read of 15.85, and Argentina is to take some tough decisions on spending ahead of a meeting with the IMF tomorrow. The Indonesian rupiah, meanwhile, has fallen to a 20-year low versus the US dollar. And if you hadn't seen it over the weekend, Fitch downgraded Italy's credit rating on Friday, citing debt and governance concerns. Okay then, well, food for thought, something to take away with you into the trading day and beyond. Why not think about this? Basic industries such as energy and commodities have been out of fashion in the US since 2008, and their weighting within the US 500 index is now approaching an all-time low. That's surprising perhaps given relatively high oil prices and the significant rebound in earnings from oil companies in the USA. But nonetheless, the chart doesn't lie, and you can see the peak as far as the commodities and energy stocks were concerned in the US, and then this continued downward trend since 2008 towards the current levels. So the question really, I suppose, is it time now for a rebound in the fortunes of these out of favour stocks, or will technology and similar businesses continue to dominate the indexes for some time to come? Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. And do take a moment, please, to read this risk warning thoroughly. Thank you for your time.